The history is Matt and I had a lot of shared clients going back many, many years. Even before I met Matt, we had a shared client, the Perfect Gene. In fact, the content is part of the webinar. They in fact brought this idea to the table. They were like, "Hey, we use post-purchase surveys all the time to calibrate last touch," and I was doing incrementality testing for them. So they would triangulate what the post-purchase survey says, what the incrementality test is saying, what the MMM is saying, and they would try and line up and see if they all are in sort of are they recommending the same investments on the other side. And we actually have a case study we're going to walk through, very simple case study. But over the years, we've had sort of a lot of shared clients, and we now have built an integration to make it much easier and more seamless, and sort of like all the nooks and crannies of how you do that together is kind of more plumbed nicely together. We'll talk through that today. But Katie, you hit the nail on the head, which is this has been sitting around for many years now. It is significantly underutilized. Would love an opportunity to democratize this across the industry. Matt, how would you respond to that? Is that how you see it? Of course, you have a different vantage point. What do you see?
Yeah, exactly. I think the post-purchase surveys or how did you hear about us surveys have been used kind of forever.
Yeah,
And our point of view is more or less like how do we bring a more scientific approach to that data,
yeah,
so that it is less of maybe a gut check in the sense of how things are working, and it's more kind of driving decisioning. And yeah, we'll get into it. But the channels that we're really like as a company, we're not like super focused on meta, because
yeah.
from a measurement gap perspective, there's not like there's a lot of infrastructure already built there. But as brands start to scale into, we think about the channel that are kind of
Yeah.
exploding right now, like YouTube and influencers and audio. That's where those gaps really start to widen. So that's kind of what we're most excited about. Is kind of giving all these channels a chance.
To actually shine. Okay, how about we jump in? Okay, so as we will talk through all of this in content. Okay, thank you folks for joining. I'm sure as folks stream in, they'll have more questions. Can you guys see my screen? Okay, there's a sort of a dense agenda. I'm not sure we'll cover all of it. We'll cover as much as we can, and then of course we'll share the recording and the slides with you. Um, a lot of you guys know me. My name is Madan. So, unfortunately, all I know is attribution. I've been doing this for a long time. But I've been working with Matt for a few years now across shared clients, and we have a couple of case studies together. And what we want to talk about in this particular session is how do you integrate post-purchase surveys and causal attribution? How can you use post-purchase surveys as potentially multipliers in attribution, causal attribution framework? Okay. That's who I am. Nice to meet you all. Matt, if you want to intro yourself.
Yeah, I'm Matt Barr. I'm the CEO and co-founders at Fairing. We are an attribution survey platform. We focus pretty unilaterally on post-purchase surveys. Again, as I alluded to, really helping brands understand top of funnel. Today, we work with about 2,500 brands, heavy on the kind of D2C e-commerce side, but also work across insurance and a few other verticals as well. And yeah, again, really just trying to kind of power how did you hear about us surveys all across the internet so that we can really start to use kind of the aggregate size of our data set to help brands make better decisions. So
Amazing.
yeah, super excited. We work with a ton of measurement providers, a ton of growth marketers, and the whole kind of idea and focus here is how do we take this survey data, and kind of put it to use in a more, again, scientific way across these different methodologies.
Okay, let's roll in. Just a little bit of setup so that we warm up the context here. I mean, all of us are living in this ecosystem. I've come to call it the outcomes era of marketing. Everybody wants to report outcomes, right? Basically, business outcomes. They don't want to see vanity metrics like clicks and conversions and or engagement metrics or video completion rates and those kind of things. Those are cool. Ultimately, they need to translate to revenue, contribution margin, gross margin, EBITDA, and all the business metrics that CFOs, CMOs are constantly on the hook for delivering. Okay. We call it the outcomes area of marketing. So essentially, we're an outcomes measurement platform. Now, the problem is that if you, let me show you an example here so that it becomes obvious. Traditional, what we call attribution, is completely broken, or at least it is unreliable. Okay, here is an example I'm going to walk you through. We call this over attribution. I'm sure Matt sees this all the time. Here is an example of a really classic DTC e-commerce fashion brand. Okay, you can see the over attribution just jump at you here. This is basically what they're spending, $4.2 million they're spending. And all of most DTC marketers are trying to acquire new customers, right? So this media almost entirely, was there a question, Thomas? Sorry. I'll keep going if please speak up. Um, Almost entirely meant for new customer acquisition. Now, if you look at and if you look at the total revenue of the business, $22 million. If you look at new customer revenue alone, this is at the top line business metrics, what you find is that roughly half in this use case is new customer revenue. Okay. Now, if you take the $4.2 million they spent across all the platforms, most of this is classic Google and Meta investment, and you ask them to self-report their revenue, they report, significantly higher revenues, and that sums up to almost $50 million. Okay. Now, most marketers have applied, exclusions, CRM exclusions, customer exclusions on all of these platforms that are anticipating that the customers they're driving are new customers. But this seems to make no sense. You saw $12 million in new customer revenue. The platforms are self-reporting $50 million. They're reporting a ROAS of almost 12. So none of this seems to be believable, right? So how do you solve for this? You solve for this using what are called multipliers. Now, what is a multiplier? What you do is there are two types of approaches for calculating causal multipliers in industry. One is called incrementality testing. One's called marketing mix modeling, and they're both sort of well-known methods in the industry. This is a design of experiments-based approach. It's the gold standard for measuring incrementality. You can't always be running tests all the time. It's not practical. So you also use what's called an MMM, or a regression-based approach for estimating incrementality. All brands are using both, more or less everybody using both. The problem is that they are in practice episodic in nature. Episodic meaning if you run a test, let's say for example on Facebook last quarter, that is the read for Facebook last quarter. How does it apply to last week's spend is not very clear. So what you do is you will go run an example of an incrementality experiment here. Take a bunch of test markets, control markets. You execute the campaign in the test markets. You use some markets as control, and you use counterfactual techniques to estimate a lift. Okay, and this is the most credible way for understanding causal impact of media on outcomes. So let's say, for example, you drove 1,300 new customers. You feel really good about this measurement. You believe in this. But how do I use it? This was two quarters back or last quarter or whatnot. What you do is you calculate a multiplier. You go back to Facebook and say, hey, Facebook, what do you self-report as attribution for the same time period, same campaign? Typically, the big platforms will over-report. So you'll say, thank you for over-reporting. I'll take this over-reporting divided by what I believe is real number and calculate what's called a multiplier. So when you have a multiplier, what you can do is that you can go back and apply the multiplier for each one of these particular channels. And you can see the multipliers are meaningfully different, and estimate a multiplier adjusted revenue here. Okay. We call this base attribution and advanced attribution. So you can see the base attribution sums up to $40 million, but the advanced attribution sums up to $7 million, right? So now we can say this $4 million of marketing investment drove $7 million of incremental new customer revenue. And that represents about 60% of total new customer revenue in the business. So roughly 60% is incremental, 40% is baseline. Okay. Now you can do the same kind of thing for returning customers. And then see in this particular example, there's a really high halo of media driving returning customers, almost 50, 60%. Sum those two things up, and now you can understand the total impact of media driving outcomes. Okay, so that is now you can say that roughly about 57% of all revenue is driven by media, the ROAS of 3.0. Okay. Now you can also go apply unit economics to it. You can also look at the same data by much more granular data at the campaign level, ad set level, and whatnot. But this is roughly at the very high level how we do what's called advanced attribution or causal attribution using causal multipliers. Okay. Now, let me pause right there. Questions before I jump in? Okay, let me keep rolling. Okay, now why this is sort of a breakthrough is that these are some average multipliers. I mean, obviously, there's a lot of variance from client to client, from brand to brand, situation to situation, conversion outcomes. All of those drive a meaningful. But if you just take a very coarse approximation of multipliers, Facebook's and is roughly around here. But look at these multipliers over here for upper funnel outcomes or media, significant, likely different multipliers. Therefore, however we are tracking these channels today, Derek, you or Rene, you or Jay in your practice, the last touch attribution or tracking, as we would call it, are significantly unreliable for investment decisioning. And multiplier adjusted metrics are the way for making investment decisions with more confidence. And those multiplier adjusted metrics are now driving significant efficiencies for marketers who are deploying this methodology in market for them. Okay. So this is the idea. Now, anytime you want to do this, you have to do an MMM or an incrementality test and whatnot. But apparently, what a lot of people are missing is there is a shortcut. So post-purchase surveys can be a shortcut for incrementality measurement. You can have a daily estimate of what is incremental by using post-purchase surveys to kind of point us in the right direction. Okay. So I'll pass the baton to Matt. Matt, why don't you give us a quick demo? What is a post-purchase survey, and what kind of reporting do we get on the other side of a post-purchase survey implementation?
Yeah, so just sharing my screen here. The first thing, just for all of us to align on, is kind of how we're defining post-purchase surveys here. At Fairing, we power in-moment surveys. So we want to ask attribution-related questions as close to the transaction as possible. If you're asking this question a couple weeks after via email, let alone the low response rate, you're going to have a much lower confidence in the output of that data. So that's kind of the key point, is asking this where that conversion happens. That conversion can be someone buying a pair of socks and showing it on the thank you page. It could be an account creation. When you ever download a mobile app, 90% of mobile apps now, maybe outside of gaming, are asking this question, install. But that's kind of the key point here, is asking this question in moment. The second thing, as far as our methodology goes at Fairing, is we think of the attribution data as a concatenated pair of the channel and then a more specific attribute or entity attached to that channel. So if we think about that from, let's say, podcast perspective, which podcast is really important? So what is driving those conversions? The user can kind of type through here, find the podcast that they heard, and then submit. So that's pretty much the experience. Again, in the commerce realm, it's at the end. So it's very frictionless. Hey, the person already clicked buy now. If it is not at the end of the conversion, there's a whole kind of skip methodology that we implement so that we're not forcing the user. That's really important too. We want to make sure that there's easy outs for all of this, and we're not kind of a required state. So that's a little example of the user experience. If you've bought anything from a lot of Shopify stores, you've probably seen Fairing implemented. The next thing just to share is just an example of Fairing's dashboard. So in kind of the core takeaway here that we want to look at is the response rates. So if you're traditionally sending post-purchase surveys via email, we think about the click-through rate of that email to the conversion rate, you're looking at a 2 to 7% maybe conversion rate across the entire sample. When you move it in moment, that will skyrocket. So within kind of the Shopify world, where we have a lot of customers, that conversion rate is around 40%. In the non-commerce, we work with like Thorn and 8 Sleep, custom platforms. We can get a little bit creative with how we display. Those conversion rates drop to 80, increase to 85%. So super valuable when it comes to the conversion rate of the survey in that instance. So one thing to note, what we're always striving for is 30%. Sorry, one sec. So we're at 39 here. This is just a blog post we have that I can reference. One of our data scientists just ran a simulation to understand how accurate can we predict the non-responders to the responders. And what we noticed that at about 30%, that prediction or that error rate really starts to drop. So that's kind of like our floor for all of our customers is how do we get you at least 30% conversion rate when it comes to your post-purchase attribution survey. Scrolling down here, this is just the Fairing dashboard. We're just showing you the revenue data attached to those channels, how customers are responding. And again, Facebook, Instagram still driving a lot of conversions for this brand, but I think Madan mentioned, or I think it was Thomas in the chat, like AI recommendation, we're seeing skyrocketing across a lot of brands. So just a good example of kind of these zero-click research in one browser, go to another, where there's that lack of continuity across measurement. So that's a little example of the Fairing dashboard. The second thing I'll show here is just a basic report that we show in Fairing, which is our last click report. So this is really helpful, especially for brands who we continue to talk to every day, who are still relying heavily on lower funnel clickstream data to align on their budgets. So if that is still you, a really easy first step, if you've implemented attribution survey, is just to compare that survey data to your last click data. And everything that you most likely assumed, it's like, hey, when somebody hears our brand on a podcast, they're just going to Google and typing in the brand name and then purchasing. All of that will be kind of front and center for you to share across the team of like, okay, this user journey is not this linear clickstream path. We're advertising on radio, audio, influencers, and we're have this massive gap at the top of the funnel. So that's just a little bit about the Fairing platform and kind of how we're visualizing the data. The last thing I just wanted to share, just because we get this question a lot, is just around data accuracy. So this is just a little example. This spend is upwards of about $15,000 to $20,000 a week. So this is a fairly large sample size for this customer. And all we're doing here is tracking the survey data to the TV percentage of spend. And the correlation here is pretty incredible. We see this time and time again. But for brands that do continue to spend, there's depending on the average order value and some other factors, we were just looking at this at a 7-day moving average, but it is very clear that there's a high correlation between that survey response data and the spend going into that channel. Any questions coming out of that?
That's a really cool chart. That shows that
one possibly dumb question. So the survey is typically multi-select or single?
Single select. Yeah, we definitely, and there's a few reasons for that. Let me just reload this. The first reason is we really like to get those two responses. So the top level and the bottom level. If a user is selecting multiple options, that gets a little bit difficult. So just from a methodology and user experience perspective, that's important. The second thing, which is usually kind of the easier thing to combat that, is we do have brands that do run multi-select. 85% of consumers, this is across tens of millions of responses, 85% only select one option. So you're not like that when you end up, you just end up just adding more noise into kind of more variables into how you want to think about this. So for those two reasons, we definitely recommend going with single response.
All right, thank you.
And a lot of the just methodology when it comes to surveying is like we're obviously taking a more Occam's razor approach here of like how do we reduce the number of variables to do that. And we've just seen multi-response and customers that ask, how did you first hear about us? How did you last hear about us? It's like starts to just add all this noise into the equation, which makes the decisioning a lot more difficult.
Okay.
You have data that shows that typically people who respond, it is the first touch, or do you have any sense of that? Whether it's probably not last touch, but like first touch or middle touch?
Yeah, the way the question's phrased, it very much aligns with top of funnel. So it is when we work with like MTA providers, for example, we get the most success with them when they're adding Fairing as pretty much a touch prior to the first click. And so you can think of it somewhat analogous to the clickstream data. You're just capturing it a little bit differently. So yeah, that's as high up kind of in the funnel as possible.
Yep, thanks.
Okay, very cool. Great question, by the way. Okay, now let's talk about how these two things come together. Okay, so here's a very simple example of this is actually a shared client and a case study we published before. Now, this is actual data. If you guys can see my screen, this is actual data. This is the ROAS reported by Meta for a particular period of time by this client, Perfect Gene. So Meta is reporting a 1.67 ROAS and TikTok's reporting a 1.35 ROAS. But these are their own pixels, Meta's own pixel, TikTok's own pixel. So they're not necessarily apples to apples. Okay, there's overlap and over attribution and duplication, all of that stuff, right? So you're always asking the question, okay, how much of this ROAS is truly incremental? Okay. Now, the way you can very simply think about this is that you can take that reporting from Meta and TikTok and line it up with the fairing reporting that fairing would report. Okay. So for the same time period, the same context and whatnot, you'll see that fairing is reporting a lower ROAS. Fairing is reporting a 1.16 ROAS, 180K in adjusted revenue. I don't know, what did you call it, Matt, in your platform? The adjusted revenue is called?
Extrapolated.
Extrapolated revenues 180K, whereas Meta is reporting 257. Similarly, TikTok's between 50 and 40. So the multipliers become 69, 70% and 78%. So now you can simply apply these multipliers to your Meta reporting, TikTok reporting, and get it much closer to what we can think of as incremental performance for those channels. Okay. Pause. Matt, anything to add?
No. And you'll see, I think the eye-opening thing here is across the different channels, how those multipliers evolve. So yeah, that's the more exciting part.
All right. Okay. So this is a very simple concept, right? At any point in time, you are trying to sort of like calibrate the platform reporting. You're trying to get a multiplier out of it. Okay. You can do it by with an MMM or an incrementality test, but a post-purchase survey is much more instant and daily and ready. And it's coarse, but it's still it's a great step for you to get a first read. Now let's talk about how this works in the integration works. So what I've done is I've kind of like pulled this together here. This is a different sort of a demo dashboard where we have integrated the post-purchase survey data. This is a MedSpa data set, multi-location MedSpa. So here we call this marketing accounting framework, which is how do you break up the outcomes in a way that makes sense for the brand? Okay, in this particular case, it's a lead gen execution. So we have new leads, returning leads, and whatnot. It's all leads. We're going to mostly focus on new leads here for this particular example. Okay, so I'm going to pick new leads here, and then I am going to look at last year data to kind of make it simple here. So here in this particular example, we have they've spent something like about $105 million. They've driven about 3 million leads. And overall CAC for the business, not incremental, but overall CAC, cost per lead overall, is about $35. Okay. And then they've spent money across all of these different channels. Okay. Now, the challenge is we have to connect the post-purchase survey data to all the tracking and the reporting you see here. And you can see how they're tracking their spend. We have broken this up into a variety of different channels here, Facebook and Google and awareness and all that stuff, right? So I have a bunch of tabs here just to make it easy for us to look at. So here, what's happening is the post-purchase survey data for that particular client is pulled into the backend. And because we get order level data from PPS, from Fairing, we're able to align it with our marketing accounting framework. So we can identify which of those responses are for new leads and returning leads, or whatever classification of grouping of customer outcomes we have here. So it is apples to apples. And now we can roll it up in ways it aligns to our taxonomy, which is what we're going to show how we do. So here at the top level, for last year's data, you can see the overview. So same number of leads with obviously what we pulled here. This is the actual post-purchase survey responses. Not all of them responded naturally. It's about 20% response rate, somewhat low compared to what Matt was reporting, about 40%. But now you can see that roughly about 32% of those folks selected friends and family. Google was about 25%. Facebook was about 21%. Okay, and it's reasonably stable, as Matt was talking about. Okay. Now let's talk about how to connect the two dots between the survey data and the post-purchase survey data and the MMM. Okay, so I'm going to start with setting up some context for this. So let's go here. We build marketing mix models. Okay, so for each one of those different outcomes, we have marketing mix models. I mean, we would have run 20, 30 different iterations of models. It'll take a second to load. I've loaded up before here just to show you. You can see for this particular outcome, which is new customers or new leads, you've run something like 10, 15 runs here, right? Different modeling iterations. Every one is an iteration. We have tried different variable combinations, different parameter combinations, structure combinations, and so on and so forth to figure out what the right way to model it is. So, and we've picked one of these to be the one that we're using. We call it the winner sort of model. This is the winner model. So here, this will take about a minute to load. So I have this loaded up here. You can see the decomposition that this particular model is providing. Okay. For each one of those channels here, brand search, Facebook prospecting, and all that stuff, we have what the model is decomposing as the attribution. So it's saying that the non-brand search in 2025 drove about 32% of total new customer leads. Facebook prospecting drove about 29%, and so on and so forth. Now, first of all, you look at these numbers and you're like, wow, okay, let me look at the Facebook number. Let me start with what Facebook is self-reporting. So I'm going to go here. I'm going to go here and look at what Facebook is self-reporting. This is Facebook prospecting. This is 2025 new leads. If you look at what Facebook is reporting, Facebook, out of the 3 million leads, Facebook is claiming about 2.6 million leads. Okay, whereas here, 87%. So Facebook is saying, hey, I drove 87% of the total leads in the business. Now, so it's actually Katie's client. So Katie would look at that and be like, there's no way that's true. I mean, that they've clearly, it's a big portion of the investment, about 40%, but there's baseline to the business, there's all of these other investments. There's no way this is true, right? So you're definitely waiting for the first read from the MMM. And the MMM comes back and says, oh, it's about 32%. It's a big change, right? Compared to what Facebook's reporting, what the MMM is reporting, a huge change, right? Now, if Katie was the analyst or the strategist driving this, she's like, I need one more number that gives me some confidence on this 32%, okay? Because it's a huge change. I'm going to get in front of the client and present this 32%, and the cost per lead is $40. It's not like $3 or whatever it is Facebook's reporting. Clearly a very different number. It's going to change the investment thesis. So I absolutely want to run an incrementality test, but an incrementality test is going to take me a week to design and 6 weeks to run and whatnot. It's kind of a couple of months away. So I need another validation point. So now what you do is you go to the post-purchase survey platform here and say, what is Facebook's number here according to PPS? That's obviously not 87%, right? It's 21%. So now you're like, okay, clearly it's not 87%. So PPS is saying 21, MMM is decomposing whatever it is, 32%. So clearly I have some validation that the 87% number is over attributed, right? So you can tell that, right? Now you can look at this number in a couple of different ways. Here is basically the same reporting that Matt was talking about. It's pulled in. Now this is the actual survey responses that we're getting. But clearly, it's only for the 20% of the people who responded. We can adjust it. We calls it not adjusted numbers. What do you call it in fact?
Extrapolated.
Extrapolated, sorry. And this is what you call adjusted numbers. So here is the adjusted numbers. Here's the actual responses. Okay, so we're saying for the 2025, out of the 3 million leads, PPS is basically estimating that about 630,000 leads is what Facebook claims. So what we then do is we go to the multiplier calculator here. We have a mapping function here. So I can go here and say, for whatever PPS is calling Facebook, what are the channels we are reporting that is Facebook here? It turns out there's only one thing here called Facebook. So we're going to select that. Now we end up with the multiplier calculation that's 24%. So now I can say that whatever Facebook's reporting, post-purchase survey saying that about 24% of that is what is truly incremental. So now you get two numbers. One is an MMM number and a PPS number, and we can see how far or how close they are, right? So it's clearly not 87%. It could be 32% or 28%, but you can get this number. Now, very similar example for Google as well. If you go look at the MMM's estimation of Google here, so Google is a big investment. Let me go look at the spend and CPA here. I can put this here actually. If you look at the spend and CPA here, they're about significant spend, $38 million. About 32% is what MMM is estimating. We can go to the PPS number and say, what is PPS estimating here? We can go look at the number, and Google is about 25%, right? So now Google's much closer to 100% incrementality. So these are easy ways for us to validate the big investments. What is MMM saying? What is PPS saying? Eventually, we'll run a test and get a more accurate number, but it very quickly allows us to calibrate the results. Okay. Now, this is one use case. Another use case is, let's take the smaller investments. Okay, the smaller investments, like for example, TV. And if you go look at the TV numbers here, if I go pull up TV investments, they have mostly CTV here. Okay, so we have two CTV investments. One is the Roku CTV investment. Second is this is basically Trade Desk. They're taking Yelp audiences, exporting it into Trade Desk, and buying those audiences on Trade Desk. So this is basically Trade Desk. Okay, so it's a very small investment, about 2 and change percent worth of investment of the total. They spent $105 million in total. About 2 point something $million is going into TV. So it's a smaller investment. Okay. Now, if you look at the last touch attribution, these are coming from different platforms. Roku has much better last touch capture. Trade Desk in this case does not have really good capture. So they are in different currencies. So cost per lead is not really comparable. The base BA cost per lead is so different. You can't believe it. Like when they're both CTV executions, why would they be so different, right? So it's very hard to trust these numbers. Now, if you go ask the MMM has a problem in this case. It's called the MDL problem. Okay. We call it the minimum detectable lift problem. So you need a minimum level of investment and minimum level of impact for the MMM to actually find signal and be able to attribute a signal. Now, these are very small numbers, and therefore what happens is that when we go and ask the MMM, how much do you attribute to this particular channel? You will see the Yelp CTV is really small, about 0.27%. And then Roku CTV is even smaller, 0.02%. And if Katie isn't getting in front of the client, she's going to be like, not quite sure if these numbers are reliable here. The cost per lead numbers are 165. I know that CTV is a strong channel. I can't go put a $2,000 cost per lead in front of the client. These numbers are not reliable. I need to run a proper incrementality test, but I would love to get a quick read from something else so I can justify the business case for a incrementality test. We go to post-purchase survey. The TV number is almost 4%. So clearly, a number of people are saying that TV is what they remember as when they saw the brand, right? So this is clearly significantly different. So same thing, we go to the multiplier calculator, we go and say, okay, let's go capture, where is TV here? Here, TV. Now, what happens is you take the TV mapping here, map it to whatever we call TV in M squared, Roku and Yelp. And now we have some proration mechanisms here. We're using spend as a proration mechanism here. We can also prorate it based on other factors. Now you end up with a very different cost per lead here. Look at the cost per lead, $20, not the $2,000, $3,000. If you take the post-purchase survey data and use that to prorate what we are seeing in the last touch attribution, the multipliers are very, very different. So if you'll see that, what we've applied here in the data here. So you see that we applied the 400% multiplier for Yelp and 100% multiplier for Roku. Now the cost per lead numbers are $20 compared to the $2,000 MMM reported. It's well under your overall cost, the cost per lead for the overall brand. Now you get signal that you wouldn't have otherwise gotten. Now you can go in and justify the time and the space and the budgets required for a proper test to prove out Yelp and Roku, and potentially use this to drive significant investment thesis and investment upside for the brand. Okay, let me pause right there. See if that is a use case that maybe Katie you've run into, or anybody else. Matt, if you've seen anything like this.
Yeah, we've done. I don't think we've published these yet, but we've done IP matching with a few of the CTV providers. So pretty much looking at their user level data around conversion data compared to the PPS data, and like I wouldn't say this is for every brand. I'd say maybe like 80% of brands. Their signal is just so off. And if we look at the clickstream data for those users that say TV, it's like consistently what you'd expect on the lower funnel. So it's Google, it's meta retargeting, it's those channels that are then capturing that user from the pixel and clickstream data, and they just don't have exposure into it. So yeah, this is like a very typical story that we see. especially across like linear, even more so than CTV today.
Okay. Pause. Anybody else has a point of view? Okay. So the important thing is all of this has to drive decisions, investment decisions. So you can see that the investment decision would look very different if we just took the MMM at face value, right? Where you'll end up with very different cost per leads here. But if you took the post-purchase survey data and understand the fact that MMMs are not really good at measuring really small channels, like a 0.5% spend, 1% spend, and whatnot. Those are really small channels for the MMM. And so it's not necessarily reliable. You can use the post-purchase survey data as an alternate measurement and still calculate multipliers, drive reporting, and potentially use that reporting to either drive investment decisioning or at least a test that allows us to get more confidence that CTV actually could, smaller channels like CTV could play a bigger role for the brand. Okay, that's one use case. A similar use case here on, I'll go into another Yelp use case here, which was also very cool. This is the Yelp CPC product. This is the search product. Okay, they again very small amount of spend, about 0.5% of spend compared to what they're spending, not very large, and but they're claiming almost 3% of conversions of leads. Okay, so clearly it looks like, according to them, it is working. The cost per lead is like five. What is it? Like $5 here, and you're like, wow, this is very strong, but I don't believe it. Everybody is reporting these last click numbers, so there's no trust in the last click numbers. Okay. Now, when we go ask the MMM again is a very small amount of spend, but even for the small amount of spend, where is my Yelp prospecting here? Look at that. It's picking up a small amount of conversions. Okay. And then what's my cost per lead here? If we go look at the cost per lead here, where's my Yelp prospecting? Where are you? Here, $16, right? So like this is very strong, but how reliable is it? I mean, how much of my faith am I going to put on this read? I need something else to tell me it's worth doing a proper test. So we go to the post-purchase survey data. In the post-purchase survey data, when we go look at the overview, Yelp pops here, right? Almost 2.5%. Now, if you remember what last year's numbers was 2.7%. So similarly, if you go calculate multipliers for Yelp here, Yelp prospecting. We map, where is my Yelp prospecting here? We map whatever you call Yelp here to whatever we call Yelp here. And then now you end up with a near 100% multiplier. And therefore, the average, the advanced attribution cost per lead is $5. So this means that there's a significant opportunity in this particular channel for us to go in and scale with the brand. So what we would do in these cases is that there's something called multiplier management. When you hit that, it would open up a console, this multiplier management console. Here we would punch in the multipliers. A lot of times, if it's MMM, it will automatically get uploaded as a multiplier. In some cases, we'd override. Where is an override? Here's the PPS override for CTV, Yelp CTV, and Yelp prospecting. You can see we're overridden here. Here, one more here for Roku. So we can override it with the PPS multipliers that can drive the reporting, and that reporting can obviously drive significant change in decision making. Okay. Now, it's also interesting in the sense that it's not always straightforward to just use the reporting as is, and pull up the PPS reporting again here. So there are some use cases where organic attribution and paid attribution roll up into one. I had a TikTok use case I wanted to show where it would show that where it kind of blends into one. So you need to use some discretion as to how you're using that data. Okay. So let me pause right there. About 15 minutes. Let's take some questions. Any questions?
Actually, your last comment there on organic versus paid with TikTok, that was something that I was thinking about earlier on Google. Like when you do the post-purchase survey, and you ask people where they found out, how are you delineating between a paid Google spot and a organic, Google listing?
It's a good question for you mostly, Matt. I'm sure you get this question all the time. What is paid versus organic? How do you help them dealing?
Yeah, it's like within Google, there's not a great answer there. Like, and we're using more like correlations if we look at spend from a multiplier perspective. It really depends on your non-brand search as a function of your strategy. So we've worked with a lot of brands who like non-brand search is, if we look at the percentage of organic, is very low, whether from an SEO or even just from a paid perspective. And we're usually taking a multiply or a percentage of that and then using that across the survey data. Does that make sense?
It does. Problem for us is non-brand search is the largest part of our budget.
Yeah. So
Okay.
on the pay, is there an SEO component to that as well, or is it mostly paid?
It's not included in that budget. There is an SEO, a lot of SEO work that we do, but it's outside of that. I'm just thinking with as a proportion of our paid media budget, we're putting a lot into non-brand search. So hard to delineate versus organic.
Yeah. Typically, we'd look at kind of we would join the SEO kind of initiatives with the paid side on Google to look at the total traffic percentage, and then use that breakdown to understand the PPS data a
Oh,
bit better.
Okay. Thank you.
All right, that's a cool insight. So we strongly believe in this thesis called triangulation, which is there's no one truth that speaks everything about every channel. MMMs, incrementality testing, post-purchase surveys, they're all used to drive incremental insight and to drive decision making. Let me open up the floor here a little bit. Katie, how would you say you've used similar data sets in the clients you work with?
Yeah, so I think there's like a lot of application here because I do work with a lot of brands that have a very diverse channel mix. And those channels that are part of that long tail where they're not spending a lot, it is hard for the MMM to get an accurate read. And then, how do we translate that to a geotest roadmap? Geotesting can be expensive, so you need to be like smart and strategic in terms of where you want to put those test dollars. So I think this lens and filter can help give you that insight into what of those channels actually have the most promise and potential, and that you should prioritize in terms of testing. So
Yeah. Um,
Another thing to note just about triangulation and using multiple data sets, and I don't know if you and I have gone deep on this, Madan, but another common use case that we see is using the survey data distribution of channels as a prior when recalibrating your MMM.
yeah.
So if we think about kind of where the spend is, and typically a heavy index on Meta and Google. If you take the survey data, which is going to allow these harder to measure channels to shine, again, influencers or YouTube or whatnot, and use that
Yeah.
and run through that, the MMM, it usually will start to make a bit more sense with the investments, at least with your general hypothesis with channel performance based on other metrics. So that's a very common use case that we see to kind of do another gut check across the MMM.
Yeah, that's a great use case as well, using priors and MMMs. Usually we use a lot of incrementality testing, and post-purchase surveys become essentially a way to anchor some of performance of some channels that are really low spend or we don't have a ton of
But you
price.
can't run an incrementality test on an influencer program or something that isn't programmatic is really where it starts to shine. Yeah.
Amazing.
So since the survey itself is like immediately after the conversion event, is it possible, or do you actually use the data to do some sort of in-flight like spend saturation analysis, and then do reallocation of budget?
We're not doing that at the moment. We're in the process of starting to ingest spend data across our customers to be able to kind of make more of those informed decisions, but not at the moment. Much of the it's a lot of post capture analysis when it comes to making those kind of adjustments.
So Jay,
I'm curious. Yeah, let's double click into that one. Yeah.
teams use it in M squared is they take the multiplier adjusted numbers. So you'll see the CMO dashboard gives you multiplier adjusted numbers. There's another dashboard called the channel dashboard that gives you campaign level, ad set level, ad level reporting. Again, multiplier adjusted. Now you get closer and closer to being able to make operational decisions where you can simply look at a campaign or an ad set and say, am I fully saturated? Am I not? What's the current performance? Because it's multiplier adjusted, it can be interpreted as causal. So you can now do month over month, week over week analysis. As I'm going up, what's happening to performance? Is it saturating? Is it like, still keeping up? And then you can use that to drive significant investment differential decisions.
Got it.
Okay, we got about 5 minutes. Any other questions from the group here?
Matt,
Scott?
I liked sorry, just one quick question. Matt, I thought that data point was really interesting in terms of what is the minimum response rate level to be able to have confidence in the data once it's sort of prorated out around that 30% or higher. When you did that study, were you comparing it to the MMMs from brands and those outputs, or I'm just curious on the methodology around that.
Yeah, that methodology, that methodology is our ability to predict pretty much attributes of those that didn't respond. So at about like 40%, we can, with a very high confidence interval, the percentage of distribution across channels is not going to change dramatically.
Right.
We're taking that a step further now with like user level demographic data to start to understand if different types of individuals respond to surveys differently. And then we're going to normalize that bias at the second level. So that's kind of the next step to that to get to an even better extrapolation. It is not looking at accuracy of spend measurement in that sense. That's really where like the triangulation starts to come into play. How can we start to validate these with different methodologies? It was really just to look at the response rate. And if you have a 20%, like Madan showed earlier, like it doesn't mean that it's horribly wrong. There might be like a 4 or 5% variance in there instead of a 1%. It's like pretty steep as we saw. And there's a few other factors, like we have a couple brands which we don't recommend have like 25 response options. And it's like, yeah, our ability to predict that gets it quite difficult. And then the last thing I'll point with regards to the validity of the data is randomization. Hopefully everyone here who has a survey is randomizing the responses. That is like the most crucial part in your ability to rely on this. Transparently, it doesn't really matter like sub 250 to 500 responses a month. The randomization actually doesn't do too much. But once you get above 500, especially once you get around 1,500 responses within a sample, like the randomization really starts to show its work. And that's how someone's on a smaller screen, they don't see the submit button. Like there's like all these different UX edge cases that really get normalized when you start randomizing.
Cool. Thanks.
Great examples. Okay, room for one last question. Anybody? Scott, good to see you here. Okay, going once, going twice. Okay, folks, thank you so much for joining. I will send out the recording right after, but I appreciate it. And if you have any questions, of course, reach out to Matt, reach out to me. Happy to be a resource for you guys as you guys navigate your attribution advanced measurement. Thank you so much for joining.
Thank you.
Awesome. Thanks, everyone.
Thanks.